The AI boom isn't slowing down. It's actually speeding up. But here's what most investors are missing. The biggest winners aren't always the names everyone's talking about. That's because after running hundreds of AI-related stocks through our proprietary quant model, only 4 names rose to the top. Those are some of the strongest signals we've ever flagged. In the next few minutes, I'll break down exactly what our data is telling us about these stocks, their exciting upside potential, and why the window of opportunity to act is closing sooner than you think. And before we dive in, let me introduce myself. I'm Steve Reitmeister, but everyone calls me Righty. I was formerly the editor-in-chief at Zacks.com, and I'm a partner at WallStreetZen, where our quant team analyzes thousands of data points to help investors beat the market. If you want more videos showing you tomorrow's potential winners, please hit that like button now. That lets me know I should make more videos like this in the future. Let's start with a bang. Stock number 1 is Micron Technology with a symbol of MU. If you've been paying any attention to the AI arms race, you already know that NVIDIA is building the most powerful GPUs on the planet. But here's what most people miss. Those chips are completely useless without one critical component. I'm talking about high bandwidth memory chips, also known as HBM. It's the ultra-fast stacked memory that sits directly on every NVIDIA and AMD AI accelerator, and without it, these chips simply won't function. Now, right now, only 3 companies on Earth can make it, and of course, Micron Technology is one of them. What makes Micron the most compelling choice right now is the tariff environment. That's because Samsung and SK Hynix are both South Korean companies currently facing 25% tariffs. That makes Micron the only major American HBM producer and the obvious beneficiary of every chip maker looking to de-risk their supply chain from foreign operations. Now, it's a win either way. If tariffs stay, competitors just got 25% more expensive. If tariffs get rolled back, the supply chain diversification towards Micron has already begun. That ship has sailed. Now, then there's the big, beautiful bill. Micron is building a 15 billion DRAM fab in Idaho and a 100 billion mega fab in New York. At a 35% tax credit, that's potentially over 37 billion in direct cash rebates, something that South Korean competitors simply can't access. The fundamentals back up the growth story with revenue up 196% year over year. Even better is the most recent quarterly earnings growth, which exploded from $1.56 to $12.20 per year. We're talking about 8x growth in earnings, right? Now let's look at what our Zen rating system says based upon the 115-factor fundamental review. Now, Micron holds an overall Zen rating of A, ranking in the top 0.7% of the 4,600 stocks we track. It also is the number 1 ranked stock in the semiconductor industry. That is a very impressive feat, given some very other attractive stocks in that group. Now, as for growth, Micron ranks in the top 4% of the stocks, given the consistency of recent growth, not just earnings, but we're talking about revenue, cash flow, EBITDA, and profit margins as well. As for financial strength, they also rank in the top 4%, as their soaring cash flow has allowed them to actively reduce debt while also hiking their dividend by 30%. Sentiment is not too shabby either in the top 5% of all stocks. That's because of the 25 Wall Street analysts covering Micron. There are 24 pounding the table with buy and strong buy recommendations. Even better is the street high analyst price target of 700, pointing to more than 70% upside in the year ahead. Note this comes from Tom O'Malley of Barclays, who ranks in the top 1% of all analysts for his stock picking prowess. Now, for the risk, Micron scores a D for safety. This is all about how volatile stocks are in the semiconductor industry, which is no surprise to anyone. That said, there is no denying the exceptional demand from the AI boom leading to explosive growth. Now add on top the tariff tailwind, U.S. manufacturing advantage, and the massive tax credits point to a company firing on all cylinders right now. And here's one more feather in its cap. I added Micron to my Zen investor portfolio back in December of 2025. Even with shares already up over 70%, I still believe it's the best tech stock to own for the year ahead. Thus, I continue to pound the table for new investors to climb on board now. Now we roll on to our second under-the-radar AI stock in Teradata with a symbol of TDC. Now this is a stock that most investors are completely sleeping on, and that's exactly what makes it so interesting. Before any AI model can generate value for a business, someone has to manage, clean, organize, and move massive amounts of data. That's the unglamorous mission-critical work Teradata has been doing for decades, and in the AI era, that work has never been more valuable. Every Fortune 500 company running AI initiatives needs a reliable data infrastructure backbone, and Teradata is already embedded inside hundreds of these companies. This isn't a company trying to break into the AI space. It's a company the AI space is already leaning on, right? The stock has been beaten down and largely ignored, trading at levels that don't reflect what the AI-driven demand could do for this business. Now, at current prices, TDC is potentially one of the most undervalued AI infrastructure plays around. To say that Teradata scores an A from the Zen ratings is a severe understatement. It is actually in the top 1% of all stocks we track. The standout component is value, right? TDC also ranks in the top 1% in this category, reflecting that it is severely undervalued at this time. Now let's combine that with a financials grade that also scored in the top 1%. It's truly rare to see a company this well run with real earnings power that the market has so egregiously mispriced. On the Wall Street side of things, we see a number of top analysts trying to one-up each other when it comes to their adoration of Teradata. Now, Eric Woodring of Morgan Stanley sees nearly 40% upside from current levels in the year ahead, whereas Tyler Radke of Citigroup puts his fair value target 63% above current levels. Finally, we have Patrick Walravens of Citizens with his street high 49 target. That implies over 90% upside over the next 12 months. As for the risk, one of the biggest of the competitive pressures from the likes of Microsoft, Google, Snowflake, and Databricks. They're all gunning for the enterprise data platform market. Teradata's economic moat is a deep roster of existing relationships and decades of embedded infrastructure experience. Putting it all together, their excellent ratings for value and financials, coupled with Wall Street targets up to 90% above current levels, makes for a compelling investment. In general, when a quality business gets this cheap, it tends not to stay that way for long. So do consider if Teradata has a spot in your portfolio fairly soon. All right. By the way, if you're liking what I'm putting out there so far, please hit subscribe and that notification bell. That way you'll be the first to know when I post more videos like this in the future. Let's keep it moving with stock number 3. We're talking about LiveRamp Holdings with the symbol of RAMP. Here's a company that sits at the absolute center of the AI data economy. And almost nobody in the retail investing world is talking about it. LiveRamp is a data connectivity platform. In plain English, it helps companies safely share, link, and activate data across different systems and partners without exposing private information. That might sound like a back office function, but in the AI era, it's one of the most critical pieces of infrastructure that exists. AI models are only as good as the data feeding them. And right now, every major enterprise on the planet is sitting on mountains of valuable data that's siloed, fragmented, and impossible to use at scale. LiveRamp provides that plumbing that fixes the problem. Every company deploying AI needs clean, connected, compliant data. LiveRamp is already embedded inside some of the world's largest brands and data ecosystems. And as AI budgets grow, so does the value of what LiveRamp provides. The fundamental data backs up this bullish thesis. Once again, we have a stock that scores an overall Zen rating of A, ranking the top 1% of all stocks we track based upon its fundamental prowess. This shows up clearly in their strong financials rating based on improvements in earnings, margins, and their strong balance sheet. Even more exciting is the A grade for the AI factors in our model, which point to the most timely stocks. Now, let's be transparent about the risk. Ramp operates a competitive space where Google, Snowflake, and a wave of startups are all circling the same market, so they need to continue to execute at top-tier level to stay on the growth path. Again, we are talking about a stock scoring the top 1% of more than 4,600 stocks based upon the quality of its fundamental profile. That's appealing enough. Now layer on their impressive AI score based on 20 years of market analysis pointing to the most timely stocks. Add that together and Ramp is an under-the-radar AI trade that deserves your immediate attention. Before I get to the last stock in this video, I wanted to thank you for making this far by sharing a special report featuring even more stocks with significant upside potential. Just click the link in the description or scan the QR code to get my free report, 3 stocks that double this year. For the 4th and final stock, we have SanDisk with the symbol of SNDK. Now, you already know Micron is our top pick for the AI memory trade, but there's another angle on the same megatrend that too many investors are totally missing, and it's truly one of the most interesting setups on the list today. SanDisk makes flash storage, the technology that underlies every data center, every AI training cluster, and every edge AI device on the planet. Now, if Micron is the high bandwidth memory chip story, then SanDisk is the mass storage story. I was trying to say that 3 times fast. Every AI model trained, every inference run, every data set process has to live somewhere. Thus, as the AI workloads scale exponentially higher, The demand for high-capacity flash storage scales right alongside with it. One thing that makes SanDisk particularly compelling is its story of independence. For years, it was buried inside a much larger conglomerate. I'm talking about Western Digital. That meant their exciting flash storage business was lumped in with less compelling hard drives, consumer electronics, and product lines that had nothing to do with AI. In 2024, it was spun off as its own standalone public company. That makes SanDisk the pure-play flash storage business at exactly the moment when flash demand is entering a multi-year supercycle. That is a compelling setup that gets even more exciting as we dig into the data. SanDisk holds an overall Zen rating of A, ranking the top 2% of the 4,600 stocks we track. Now, growth scores in the top 1% of all stocks. Remember that our growth rating is all about the consistency of growth, meaning things have been on the upswing for quite a while. SanDisk is no slouch when it comes to sentiment, where they score in the top 4% of all stocks. This is our signal that smart money is wise to the attractiveness of these shares. And these are analysts with proven track records. Among those giving SanDisk a strong buy, we've got Wamsi Mohan of Bank of America, a top 1% analyst based on his historical stock picking performance. We've also got Joseph Moore of Morgan Stanley, another top 1% analyst who is equally bullish. When multiple top analysts align on the same strong buy call, that's not noise, that is opportunity knocking. Now, the risk. There's a real debate about whether NAND flash pricing can sustain current levels or whether oversupply returns to pressure margins. And like DRAM, flash storage is historically cyclical. If AI CapEx spending moderates, SanDisk could give back some of those gains very quickly. With all that said, an extremely high Zen rating, plus strong buy consensus from top-rated analysts, and a flash storage supercycle still in its early innings, this makes SanDisk a very compelling finale to our stock list today. And like Micron, SanDisk is also a current holding in my Zen investor portfolio, where I added in February of 2026. Just like Micron, we've seen impressive gains, but the reason to buy now is because of all the exciting upside still ahead. Okay, folks, that's my under-the-radar AI stock list. Do you like any of these 4 stocks? Did any of them catch your eye, or do you have your sights set on others? Please leave a comment below, as I'm generally curious, and often insights from our community pave the way for future videos. And if you're still hungry for more AI beneficiaries with significant upside potential in the coming months, then check out this video now.